Hey guys, it's Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time, and this week, guys, I can honestly, genuinely, truly tell you I'm doing something I have never done before. Yep, I have been doing lectures for over 10 years. I have done hundreds and hundreds and hundreds and hundreds and hundreds of lectures, and I'm doing something that I have never done before. I'm taking an actual client-customer trading plan, and I'm going to review the plan. Why? Because I think a lot of you out there don't actually have a trading plan, or if you do have a trading plan, either you're not following it or it's just not complete, right? It's just something that needs to be better. This business is extremely challenging and nearly impossible if you don't have a trading plan. If you have a plan, you have a fighting chance to succeed in this business. Money management rules, trade management rules, trade entry requirements, entry stop loss, okay? Patterns that you're going to take, time of the day that you're going to trade, all of those things, daily routine, et cetera, et cetera, et cetera. This lecture is a little longer than normal because we are going deep, really deep, granular deep, all right? And remember, guys, there is no fresh start. Every day is the possibility to be better than yesterday. But if you don't have a trading plan, you cannot expect much from this business. So please heed the advice from this lecture. Build yourself a trading plan, and then you have the possibility to succeed in this business. But again, a new lecture I've never done before. We're going to review a trading plan today and get really granular, all right? So if you're one who's needing a trading plan, then definitely stick around and watch this video through the entire end of it, okay? There's a lot of great stuff in it. If you like the videos, click the like button, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is trading plan review. You know what's interesting? I've been doing these lectures for over a decade now, to be honest with you. And I've done hundreds and hundreds of them. And I'm not sure that I've ever done a lecture as a trading plan review. So we had mentorship a couple months back, and during that mentorship, I talked to a lot of traders, and some of them have sent me their trading plans to review. Some of them have been massive, like 39, 40 pages. Some of them are multiple documents. And I thought, you know what, as I've been going through these trading plans, I thought it would be a good idea to take one of those plans and review it with the general public. Why? Because I think a lot of you out there don't have a trading plan, or you're curious, or you don't know what to put in your trading plan. And being that we're starting a new year, and I know a lot of people have New Year's resolutions and things they want to do better in the new year, I thought this would probably be a good time to do a lecture on a trading plan. And again, I've never done this. So what we're going to do today is we're going to talk briefly about what should be in a trading plan, and then we're going to review an actual trading plan that somebody sent me. I'm not going to tell you who it is. That person is certainly welcome to say if it's their plan or not. They know who they are. It is a lot of text, so please, I don't want you to get bored, and the reason I'm saying is a trading plan is your roadmap to success, okay? And I find it fascinating how so many really smart people come into this business and do some of the dumbest things that I have ever seen, right? You'll have these people that they run analytics for a company, or they're a CEO of a company, or they have a PhD from Harvard or wherever it is, and they come into this business. They don't track their trades. They don't journal their trades. They don't have a trading plan. They don't do anything that a normal, successful person would do to run a successful business. So that has to stop. So I'll basically put it to you like this. Do you have a trading plan is the question, okay? If not, you're a gambler. Plain and simple. Do you have a trading plan? If not, you're a gambler. If you have a plan and don't follow your plan, you're a gambler, okay? Your plan is, I said a second ago, is your roadmap. And if you're not going to have a map, you're going to get lost and you're going to make some bad decisions. If you have a map and you choose to deviate from it, you're going to get lost and make some bad decisions. So I urge you, if you don't have a trading plan, please put one together. Look, this is where Live Traders is different than almost everybody else out there. Everybody else out there is like, come watch me trade, come copy and watch me trade. It's a bunch of BS. You have to learn how to trade yourself. You have to have a path, a method of success. Everybody's a little bit different. Sure, we use the same general concepts: support, resistance, bottoming tails, topping tails, volume, right? Sometimes we use trend lines, indicators, whatever, but everyone's a little bit different. Some are more nervous and jittery. Some are more patient. Some have more time. Some have 30 minutes a day to trade. Some have 3 hours a day to trade. Some have $10 million to trade. Some have $10 to trade. You're all different. And the plan has to match your personality. Okay, and if it doesn't, it's going to be challenging to follow. But if you don't have one, it's going to be really, really hard to follow. All right, so to me, it's a very serious topic. It's not a sexy topic, right? It's not something you sit there and go, oh, this is a lot of fun. But in reality, it should be, because this is your path to freedom. Think about what I'm saying for a second. It's not cliche. This plan is your roadmap to freedom, and yet you don't want to put one together. Every company has a business model, a business plan, a business approach. Sports teams have whole departments that track statistics, and you don't even have a basic plan written on a napkin. Give it some thought. And if you continue to go that way, you're going to struggle. So today, we're going to hopefully help you fix that problem. And if you do have a plan, hopefully we'll help you add a few things or fine-tune a few things to make it a better plan. Okay? So for those of you who have taken Trading Plan Essentials, okay, this is the table of contents. Okay? This is exactly the table of contents. Okay, why am I putting it in here? No, we're not going over Trading Plan Essentials today. We're not going over that course today. There's 2 slides from that course that are in here, this one and the next one, and that is it. Okay, so when you look at this, we have a planning cycle of success, trading plan considerations, goals and objectives, principles of trading, awareness and rules, money management, trade management, entry requirements, your routine, your record keeping, all things that you guys aren't doing. Right? Back testing, journaling, psychology, final thoughts. Why isn't your plan broken down like this? Literally, it's your roadmap to success. I mean, it should be I don't want to call it a secret, but it should be like a guarded secret that gets put in your safe every day. That's how important this document is. And yet, most of you guys spend more time funding your trading account than you do building a trading plan. You know how they always say that people say they spend more time planning a vacation than planning for retirement? That's foolish. Most of you spend more time dreaming about how successful you're going to be than actually putting together a plan for success. Right? And you guys have heard me say this before. Outcome goals without process goals are pipe dreams. Without a trading plan, all you have is an outcome goal. I want to make money. But the plan is the process. So today we're going to talk about the process. And I'm going to need and require audience participation. All right, plain and simple. This is someone's trading plan. There's a lot of text in it. We're going to read through a lot of text today. All right, so put your glasses on, zoom in on the screen. All right, and we're going to go through what you guys think this person could do better or worse with their plan. Now, I personally, to be honest with you, I've already reviewed the plan and I've marked it up. I printed it off, have it right here, and I marked it up. Okay? So, without further ado, let's dig in. There's one more slide before we get to the plan. All right? This is what we call a planning cycle of success. And this is the way life works. This isn't just the way trading plans work. This is the way life works. You plan for something. Then you try to implement the plan. Okay? Then you measure the implementation. You assess the measurements, and then you make adjustments or improvements. And you do this over and over and over. This is what sports coaches do. This is what business coaches do. This is just what generally successful people do. They plan something on paper. They go out into the real world, and they try to implement the plan. Then they look back and they measure it. They assess the measurements. And then they make adjustments, improvement. You always hear in football, oh, we need to make some halftime adjustments, right? Well, there's a reason for that, because something with the plan didn't go according to plan. But you wouldn't know that unless you tried to implement it, measured it, assessed it, and then made improvements on it. This is just the way it goes. But if you don't have a plan, it's kind of hard to make improvements on it, isn't it? Right? If you don't have a plan, it's kind of hard to implement it because you don't know what to implement. If you don't have a plan, it's kind of hard to measure it, isn't it? You don't have to raise your hand. It's rhetorical. But how many of you in here have a tracking spreadsheet versus don't? It's probably 50-50. Those of you listening, it's probably 90-10. 90 don't have one, 10% do have one. Treat this place like a business, for goodness sake. It's one of the most challenging things you'll do in your entire life. Literally, and the people that have been doing this for a few years know what I'm talking about. They're like, hey, he's not kidding. It's one of the toughest things that you can do in your life, and you come in just trying to wing it. Yeah, no, that's not going to work. It's not going to work. Okay? All right. Now, let's dig in. Now, I want to preface before we dig in. Okay? Guys, there's an awesome blog post, Mindset and Your Trading Plan. Take a look at it. It's really good. Before we dig in, this is an actual live traders client's trading plan they sent me. Okay, they sent me this a month back, a few weeks back, whatever it was, and it's long. I mean, I don't know exactly how many pages it is, but it's probably 15 pages, maybe something like that. And like I said, I've marked it up already on paper, but we're going to mark it up together and verbally make comments. I'm not going to change the text in here, but we're going to verbally make comments, and I want your audience participation, and I want your opinions on what you think this person is doing well in their trading plan and what this person isn't doing so well and perhaps could improve upon in their trading plan. So this is an actual plan. I just literally copied and pasted it from a Microsoft Word document into this PowerPoint. Okay, so goal. Within 5 years, I will replace my traditional salary and benefits with day trading. Okay, let's start. Is 5 years reasonable in your opinion? I just yeses or nos. So what do you guys think? Is that pie in the sky? Is that a reasonable timeline? Okay. Are they on the right track? Well, okay. It depends. It depends, right? I would say if we're taking an average person with an average salary, probably. It's reasonable. But if you're taking somebody who's the CEO of a corporation and they make $5 million a year, I would say 5 years isn't enough, right? That's why I say it depends. What kind of salary are they trying to replace? Well, it depends. Now, if you're taking, like I said, an average salary, 75 grand, 100 grand, 200 grand, three, whatever, right? Then I'd say, yeah, that's not unreasonable. But as Jordan alluded to, it takes as long as it takes. But I'll say 5 years is reasonable. It's not pie in the sky. I have people that come in and say, well, in 6 months, I want to be making 30 grand a month. Well, that's unrealistic. What else can you do in 6 months to make 30 grand a month? If it was out there, you'd be doing it. Am I wrong? If you could make 30 or 40 grand a month in 6 months, you'd already be doing that job. Okay? It also depends on how hard this person works and what they do. But as a generality, 5 years is reasonable, okay? Reasonable. We have to make a few assumptions. We don't know this person, but that seems reasonable, okay? Now, 65% batting average with a win-loss or a Sharpe ratio of 1.75. Okay, talk to me. What do you guys think about this? What do you guys think about this? Talk to me. Is that reasonable? What do you guys think? Okay, let me ask you this because you guys don't know. How many R per 10 trades is that? Per 10 trades, how many R are you netting or grossing, whatever, grossing per 10 trades? Per 10 trades. Basically, what's your expectancy on this? That's right, Steve. It's very close. That's like 787 or something like that, right? Somewhere around there. It's right around 8. It's just a shade under 8. Assuming, right, and it's true, Ali, we don't know the target, right? They could certainly have a lower than 1R target shooting for a 1.75 to 1, and they might only make 1R, but their losers are small, right? But we're making the assumption that it's a basic 1.75 because it says average gain 1.75 R, correct? Right? So that's what they're saying. Average loss 1 R. So we're going to use what they said. That's close to 8 R for every 10 trades they take. That's a 0.787, something like that, okay? That's a 0.8 expectancy. Do you guys think that that's super reasonable? I think it's pie in the sky. I think if you had a 0.5 expectancy, that would be really good, like outstanding, right? 0.5 means you make 5 R for every 10 trades you make. That's fantastic. That's really good, right? 8 R per 10 trades is some Michael Jordan type shit, okay? I agree. 0.3 R is good. You guys know the range, 0.2 to 0.5, 0.2 to 0.5, 0.2 to 0.5. That's the range you want to be in. So the answer is no. 8 R per 10 trades is absurd. Now, I'm not saying a week here or there or a month here or there. Maybe that accomplishes that. But reversion to the mean will probably have you down at 0.2, 0.3. 2 to 3 R per 10 trades is quite good. It is. It's quite good, right? If you take 50 trades a month, that's 10 to 15 R. That's pretty good. Okay, so I would say this person needs to pull this down a little bit, shooting for the moon, and it's not realistic. And why do we talk about being realistic? Well, because you don't want to be depressed all the time. You don't want to sit to yourself and say, well, if this person really believes this is what they need to make, and let's say they're doing half of that, which is really good, 4 R per 10 trades is really good, they're going to say, well, I'm not doing that well. So give yourself baby step goals, baby step goals, baby step goals. I just realized I actually skipped the page in their trading plan. So let me go back real fast. Let's do that page really fast, okay? All right. This is general keys to success. We'll go over this quickly, okay? The market doesn't care about me. I like it. It doesn't care about what I want. I like it. It doesn't care about what I need. I like it. It doesn't even know I exist. I like it, right? So it certainly doesn't care about my trade. Always keep this in mind. Why is it important that this line is written in here, right here? Why is it important that that line is in there? It doesn't care about my trade. Because there's a lot of victim mentality people out there that really, truly believe, they truly believe that market makers are out to get them, right? They really believe like some external force is like, yup, I really don't like that Sophia. I really don't like that Jordan. I really don't like that Ollie. I'm just going to go take their money today. Not the Joes today. I'm going to leave the Joes alone today. It's the Ollies I'm after today. Get out of town, right? No excuses, no victim mentality. Okay? I like it. Good start, right? So 3 keys to success. Time. I do not expect to be able to quit my job tomorrow. Good. I understand that with my trading plan now in place, it could take several years before I'm ready to step away from full-time employment. Blah, blah, blah. I like it. Okay? Money management. My plan contains a large and detailed section dedicated to money management. This area will be absolutely critical for my success. I should never forget that I lost $13,000, money that really meant a lot to my family on one trade. Why? Because I had no plan and no money management. Now I do have a plan and I know how to manage money. I'm convinced that never deviating from my money management rules is vital to reaching my goals. This is correct, right? And this person is reminding themselves of that $13,000 loss just in case they were to ever forget. Meaning, when they go to review this plan each morning or each week, right, they're going to read that they lost $13,000. Not that they forgot it, but it's front and center to say, hey, yo, one punch knockout, one time. And that's the thing a lot of traders forget. Trading is like boxing. One punch, you can be winning the fight. We saw that with, oh my gosh, what was that? Was it Kamaru Usman like a while back? Dominating, boom, 5th round knockout. It happens, right? It happens. Holly Holmes, years ago, right? Meaning, you could take one trade and make one mistake, just one. You could do 99 things right and make one mistake. And that one mistake could cost you a lot of money. So I think it's great that this person is going through this and saying, hey, yo, I need to never, ever forget about the time I lost 13 grand. And if I don't ever do that again, I'll always have an opportunity to succeed because I'll always have a chance, meaning I'll never dwindle my account down so poorly, so badly that I won't have money to trade. Okay? Yeah, same, right? Discipline. Lack of discipline will destroy everything, right? Do I want to risk it by tossing aside my rules and procedures? No. My trading plan is a living document. As I implement my plan, I will measure my level of success and determine if there is room for improvement. If there is enough real evidence to do so, I will improve my plan and move forward. It will be important to consistently put into practice this planning cycle of success. I like it. So to me, I think it sets a positive tone for the rest of the plan. And when you review your plan, this is the first page you read, right? It's the first page you read to remind yourself to say, hey, yo, whoa, you're not above the market. I don't care if your IQ is 170. I'm not above making mistakes, so I need to remind myself how badly they hurt when I do, so let's not go there. Let's not do it. I like it. Okay, I like it. No victims here. So, we already talked about the goals, the 65% batting average, Sharpe ratio being a bit high. That needs to come down a little bit. Markets to trade, NASDAQ, New York, Amex, fine. Using interactive brokers as your brokerage and Live Traders Trade Management app to place those trades with share sizing correctly, fine. Days to live trade, Monday to Friday, depending on readiness, and that's in Appendix 8 we'll get to. Time of the day to trade, 9:45 to noon. Fine, okay? While building watch lists, 5, 15, 30, 60 daily. Now, for me, if I'm talking about a gap list, I'm just looking at the 60 daily weekly. Rarely monthly, 60 daily weekly. That's for a gap list. Now, if it's a carryover list or an intraday list, I think it's okay to look at the 5, 15, 30. But for gaps, 60 daily weekly is really all you're probably going to need. While trading, personally, I think most people should get rid of the 1 minute chart. My opinion. I think most people should eliminate the 1 minute. Focus on a 2, 5, 15 or a 3 minute, 5 minute, 15 minute, etc. and so forth. Okay? Indicators on the charts, I'll have a 9 EMA, 20, and VWAP. On the hourly, daily, weekly, and monthly, I'll have 50. Now, again, my opinion, I don't think you need a 9 EMA past a 5 minute chart. I would not be putting a 9 EMA on a 15 minute chart or a 60 minute chart. Okay, personally. All right, now again, some people find it helpful. I don't. If you want to put a 9 EMA on a 2 and a 5, I think that's fine. All right, but I wouldn't be using a 9 EMA on a 15 minute or a 30 minute chart. All right, now to be clear, we're going to have to move quickly through this because it's large. All right, account and position sizing, current risk $10, that's fine. I say 5 to 10. Max daily drawdown 2R, I'm good. Max weekly drawdown, this is a little bit tight, right? A little bit tight. Okay, I think it's okay though. If this person is a tight trader and you want to stop at -4, that's fine. I have two different feelings about this. When you're newer, sometimes it's better to give yourself a little bit more rope. And that's, I said sometimes, not always. Why? You want a little more experience. Does that make sense? You want to be able to trade a little more. And if you're at $5 or $10 risk, you're not costing yourself too much money. But I'm okay with the 4R. Most people keep it at 6, 5 or 6R, but I'm okay. Right? Max monthly drawdown 10R, very common. Most trading plans I see have 8 to 10R max monthly. That's fine. If you're losing 10R in a month, something is wrong. You are making a mistake. It's not the market, it's you. Okay? Daily target 3R, fine. Weekly target 6, monthly 20, fine. I'm fine with pretty much all that. All right? Trade entry rules. Only trade stocks with potential trade volume of at least 1 million shares. I'm okay with this. But we need to be more specific. There's plenty of stocks that do 1 million shares a day but are untradeable in the first 30 minutes. Plenty of stocks that do 1 million shares a day and in the first 15 to 30 minutes are nearly untradeable. So we need to be more specific. I think you need to add in time frames here. For example, has to do at least 300,000 shares by 9:45, at least 500,000 by 10 o'clock. Like put in some parameters there to be a little bit more specific. Okay? And the other part is I don't care if the average daily volume's 1 million. I want to know what it's doing today. Today. There could be a stock that averages 250,000 shares a day. But if today it's doing 500,000 in the pre-market, I'm interested. It's highly unusual. It's twice its daily volume already in the pre-market. So while I know a lot of times we say 1 million shares is the bottom, it doesn't have to average 1 million shares. It just has to do it today. And like I said, during the time I want to trade it, there has to be a certain level, minimum level of volume that stock is doing. 300,000, 500,000 in the first 5, 10, 15 minutes. Okay, so I would be more specific here. Patterns to trade, buy setups, sell setups on 2 and 5 minute time frames. Okay, wedge and flags, 2 on 2 minutes. Interesting, only on 2s. Okay, so that's not too many patterns, right? Buy setups and basically wedge flags. Fine. That's not, in my opinion, that's not overdoing it, right? It's not saying, hey, I'm going to take 57 different patterns. Okay. Exit rules, always enter stop loss, always enter target levels, always take 1/3 at 1R and hold the rest for 2R. All right, fine. No big deal there, okay? Entry, stop, target is basically what they're saying on every trade. Okay, good. Always exit all open trades by 3:55, fine. Never mess with the stop. If it's entered incorrectly, exit the trade, too bad, just don't, okay? Now, I'm not sure exactly what this means. Right? If your stop loss is wrong, then just put it in the right spot, assuming your money management's okay, right? If the stop loss is incorrect, just move it to the right area. If money management's an issue, then you need to deal with that, right? If you over share sized, or maybe you used a stop loss that was too tight, and you didn't realize that, again, the proper stop loss would cause you to go outside of your money management, then you need to change that, okay? One mistake I made in the beginning of trading was saying a lot of patterns. Yes, Andre, professional trading strategy says take 2 of these patterns, 1 to 2 patterns and master them. Journal and track before starting a new trading day. Review trading education material, good. Practice bar by bar, fine. Meditation, fine. Built-in days off, any half-day markets, fine. While trap, fine. Okay, so that's fine. All right, now remember, guys, we still have like 15 more pages to go, like 12, maybe not, maybe 10 more pages to go. Okay, on just this trading plan. Okay. This person's doing all or nothing, Sophia, so the answer to that question is no. And that goes back to, they said all or nothing. They're going to sell 1/3 at 1R, and the rest of it, or was it half? I don't remember if it was 1/3 or half. Let's go back. 1/3 at 1R, and the rest all or nothing. So no. Okay, now, appendix. Trading rules. To be read every morning before I enter my... By the way, I did not put the yellow in here. This was put in here by the trader. Okay, I did not put this yellow in here. All right. To be read every morning before I enter my first trade. I will not trade until after 9:45. Every trade must have entry, stop, target. Every trade will be made using the Trade Manager app. You guys know the Trade Manager app that Unmol's developed. This is a very easy app to manage your trades with, okay? Every trade will have a risk of $10. I will not take a trade unless it has a clearly formed buy setup, sell setup, flag, etc., okay? This will be defined later, just so you know, okay? This will be specifically defined what is a buy setup, what is a flag, what are entry criteria. When a trade is clear, and I am within my plan's requirements and under my thresholds, MAC loss, I will take it without hesitation. This is a great line, but it's not an easy line, is it? This is a great line, and I think a lot of people have it in their trading plan. The problem is they don't follow it. There's tons of trades. Today, Amazon met a lot of my criteria, and I still chickened out, right? I still chickened out. Okay, so you might want to put a consequence in here. If I don't take a trade that is clear in your plan's requirements and under your thresholds, what will be the consequence for this? See, this is, in a way, just like breaking your plan. See, a lot of people think that breaking their plan means not taking their stop loss or selling too soon. Breaking your plan is also not taking trades that meet your trading plan's requirement. Okay? Does that make sense? So breaking your plan is the same as this. Not taking a trade you were supposed to take is breaking. Now, I'm okay with being a little bit more lenient with this because this is not an egregious mistake when you're new. It's a mistake for sure that needs to be dealt with. But I wouldn't take his whole train set away because of that, right? because this is something you build into, work into, if that makes sense, okay? I'll strictly adhere to my money management rules laid out in my plan. I will not trade without a clear path to 2R, okay, good. I will always be objective. If I feel myself becoming emotional, I will walk into the kitchen and stay away from the charts for at least 15 minutes, okay? All right, sit on hands when the odds are against me. There's nothing good to trade. I'll take full responsibility for every trade. I will not enter a trade after 12. Basically track all my trades and learn from my mistakes. I will never violate my trading plan rules. Violation of my trading plan rules will result in the liquidation of my model train collection and all proceeds transferred to my wife. I'm getting a piece of that too, by the way. So I'm putting this in pink. I'm putting it in pink because this is something that most people don't have in their plan, a consequence. And if they do have in their plan, the consequence is, well, not enough. I know this person. I spent time, 4 days with them at mentorship. We had a nice long discussion in our one-on-one, and I know how much this train set means to this person. All right, some of the pieces were passed down from family members, parents, grandparents, etc., very much into this hobby. Okay, so this is a serious collection. This collection's worth a lot of money. Okay, so this isn't like somebody going, oh yeah, I just bought a train set from Toys R Us or Walmart for, $50. This is an 8-figure train set. Okay, so my point is, this matters to this person. Like, talking to them, I could see the pain in his eyes. Yes, Jordan, yes. I could see the pain in his eyes talking about the possibility of losing this. Why am I telling this to you? Because I know that this matters to this person. Some of you out there might be going, whatever, whatever. A model train collection, you can take it. No, this is a genuine consequence for this person. Okay? My point, you need to find what a genuine consequence is for you. Okay? Because for me, a model train collection doesn't mean that much. But to this person, it does. What means a lot to you? And I don't mean a little, I mean a lot. Something that would break you to the core to lose. That's what I'm talking about. I'm commenting on this because I have 2 trading plans now that have physical consequences. Right? Yaroslav's has 1,000 burpees. Another trading plan had like 100 push-ups and pull-ups or something like that. That's okay. So you're a little tired, right? I want something that just shakes you to the core. Something that you just could not even fathom losing in your life. Something that important to you. 1,000 burpees is brutal and tough. But so what? You're getting in better shape by doing it. What's something that shakes you to the core, that if you lost would turn your world upside down? That's what I'm talking about. That's what I'm talking about. Heed that advice. Okay? Items highlighted may only be adjusted according to procedures set forth in my plan. I like that. Okay? That's the whole point, Sophia. Someone is commenting, that will be hard for me to come up with. That's the idea. That's the point, right? So hard, so difficult, so challenging that you would think more than twice before you did it. And if you still did it, probably something you don't want to repeat, right? So, Appendix 2, money management, all right? Do this by thinking in terms of R, not dollars. Risk level, okay? $10 a trade, max drawdown, we've already done this, okay? If I reach my monthly max drawdown of 10, I will immediately stop live trading. In order to live trade again, I must first complete the entire PTS course front to back. I will reduce my risk to the previous level and work again towards my 20. Now, this is good, okay? And let me tell you why it's good, okay? I see a lot of people, I don't know why, I don't know where it was written, but I see a lot of trading plans that say, if I reach my monthly max drawdown, I'll stop trading for the month. And some of you right now are going, well, yeah, that sounds reasonable, right? But what if you hit your max drawdown on the last day of the month or the second to last day of the month? There's no punishment. There's literally no punishment. And you're like, that's a good point, Jared. What if you hit your max drawdown with 3 days to go? There's not really much punishment there. What are you going to do to actually improve yourself? This person is saying, I will immediately stop trading, and I'm going to have to go through the entire PTS course, which is 21 hours. And unless they do like a binge watch of PTS, it takes a while to get through that course. And they're going to reduce their risk to the previous level. I think this is just the beginning. I think it might be a good idea to require yourself to paper trade for 1 week. Make a certain R amount, go back to real money, or require yourself to do one-on-one coaching, at least 1 hour of one-on-one coaching, or require yourself to do some other type of consequence that will make sure that you don't want to see that 10R again, right? The tough part is when you're at the max drawdowns, also the most likely when the next trades start winning. Well, you could say that, Jordan, but they really should be winning at minus 5R, minus 6R, minus 7R, right? I mean, realistically speaking, now obviously that's trader dependent, and you're only as good as your worst day, week, month, right? But it's not a problem. And the reason I say it's not a problem is, Jordan, you're making the assumption that they're taking good trades that just aren't working, right? Reversion to the mean assumes you're actually doing something correctly. Well, maybe this trader getting down 10 Rs because they're making mistakes. And by definition, if they continue to make mistakes, they'll probably continue to lose. We make the assumption they're doing the right thing and they're down 10R. I'm making the assumption they're down 10R because they're not doing the right thing. Because how often do you see Aaron down 10R, Unmal down 10R, me down 10R, Cliff down 10R? The answer is never. Never. So clearly they're doing something wrong. So daily, weekly, monthly target, we've been there. 1 year post-mentorship goal, need to do the math based on timing for increasing my risk. Okay, fine. Procedure for raising risk. I will earn the right to raise risk. Good. After I have reached 20R net gains from my last risk adjustment, I must maintain that 20R net through the end of the current month. Once accomplished, I will raise my risk to the next level beginning. Again, you guys are going to hate me for this. Do you see this? I do not like this. Do not like it. And you're like, what do you mean? You just highlighted the word beginning. Yes, a misspelled word in your trading plan. I pointed this out in your trading plan, Yaroslav. However, English is not your first language. What does this tell me? Now, I know you're going, Jared, you're nitpicking. You're nitpicking, man. What does this tell me? They didn't review it enough times. This is your life right here, okay? I mean, this is a Word document where they do have spell check. Literal spell check. Spell check would have picked up that word, okay? I understand there's a lot going on, but this is part of the process to moving closer to perfection. If you're going to misspell a word like beginning, you might miss something in your pre-trade checklist and take a poor trade. Now, some people are going, that's funny, Jared. You're just overreacting. I'm not. Do things perfectly, or at least, as they say, I can't remember the name of that school, you can never be perfect, but you can give a perfect effort. This isn't a perfect effort, okay? So my point is, while this person is doing a great job building a plan, this shows there's room for improvement. Some of you think I'm crazy right now. I'm not. There's room for improvement. So now, 20R net gains, I think, is fine. But I think there needs to be a timeline adjusted to this. Look, if you made 20R in 1 year, took you 12 months to make 20R, you're not really earning the right to raise your risk. If you made 20R in 3 months, I think that's impressive. 7R a month, 3R a month. I think that's great. So for me, when this person says after they've reached 20R net, personally, I think I would add a time qualifier to that. 6 months, 3 months, something like that, okay? Because the goal isn't to make 20R a year. It's not. I know that that's a positive in that you're green, but okay. I will increase at 50% increments until I reach $50 risk. What does this mean? Basically what this person is saying is if I risk $10 a trade and I reach my goal, I'll increase that by 50% and I'll go to $15 risk. Now, I'm okay with that. I'm okay with that. But I don't want to see people risking like, $37.42. I'm exaggerating, but you understand what I'm saying. Round it off, 35, 40. I don't want to see you risking $38. That's ridiculous. Risk 35, 40, 45, 50, 50, 60, 70, 80, right? And this person at that point, the incremental increase will drop to 33% and it reaches $160, okay? And this line of thinking goes to 25% at 500, 20%, okay? And at that point, I will cap risk increases to the lesser of 0.5% of account value or 15% increase, okay? Fine. Right, that's fine. It's going to take you a while to hit those 20R gains, 20R gains, 20R gains. So this is going to take a while, and that's okay. They have a 5-year plan. By the way, another spelling mistake. Okay. So, procedure for lowering risk. How many of you have this in your plan? Procedure for lowering your risk. As soon as I'm down 10R net from my last risk, I will immediately lower my risk to the previous level according to the table below. Right? Also refer to 2.4a, further rules on increasing risk after a risk decrease. Good. Okay. Protection and number of trades per day. I understand I must not give back hard-earned gains to the market. To be successful, I will adhere to the following. Again, we've already talked about the batting average. It needs to be adjusted. Number of trades a day will depend on my level of success for the day described below. Absolute maximum number of trades, 5 a day. Fine. Number of open positions, 2, until I have locked in, meaning realized gains, at least 1R in profit. Okay? At that point, I can enter 3 open positions with a combined 3R risk. Now, think about that for a second. It's an interesting comment, isn't it? This person is selling 1/3 at 1R. Well, that person hasn't actually locked any money in because the back 2/3 could still stop out. Remember, the back 2/3 are all or nothing. So if you lock in 1/3 at 1R and you stop out on that trade, you're not actually making any money. So what would have to happen for this person to lock in at least 1R in profits? Well, they'd have to have a lot of open positions go to 1/3. Not really, because that one's making money. They need at least one trade to go 2R, right? This person needs at least one trade to hit full target, which is what, 1.66R or something like that, right? 1/3 at 1R and 2/3 at 2R. I think it's like 1.67, something like that. All right. So no more than 3 open positions at a time. I have this rule in place because it will protect me. So basically what you're saying is at least one trade has to hit full target before I can enter another position. Right? I mean, that's basically what you're saying. So maximum open is 2. To take a third trade, one of those 2 must hit target. It makes sense because their maximum drawdown is what? -2R. It makes sense. Right? Max drawdown's 2R, so at least one of those 2 trades has to hit target. Okay, fine. After 2 losses, I will not enter any more trades for the day. Good. Now, what's interesting about this comment is it says 2 losses, but the maximum drawdown's 2R. 2 losses and 2R are 2 different things, are they not? So, somebody, you math wizards out there, if this person hits 1R and sells 1/3 and then the back 2/3 stops out, how much did they lose on that trade? The first 1/3 hits 1R, the back 2/3 stops out. What's the loss? Come on, Ollie. Come on. Come on, you genii. Is that even a word? Genii? Oh my gosh, I got 3 different answers. Should I go with the Asian? Come on. Come on now. The answer is 1/3. Okay? Jordan's like, yes, you should. All right. YouTube right now is losing their mind. What? He didn't just say that. All right. So, what does this mean? Seriously, what does this mean? Well, you could actually lose 2 trades but only be down 2/3 of an R. I'm only commenting because this person might want to reconsider. Right? Seriously, they might want to reconsider. Because what if this happened? What if you went winner, loser, loser? Well, you're actually still up an R for the day. What if you went loser, winner, loser? Well, same. You're still up an R for the day. Are you quitting? Okay? My point is give it some thought. If you think about it and you're okay with it, then fine. Then fine. But I'm simply saying 2 losses could simply mean 2/3 of an R. And you might say, okay, I'm done for the day. That's fine. But just give it some consideration, right? Give it some consideration. Okay? If after reaching 3R I have yet to enter a losing trade, then I'm allowed to continue trading using a half risk. Okay, fine. We need to move on because I have so many more slides. Holy shit. I got a lot of slides to get through. We're going to have to go much quicker. All right, so I will stop trading after the very next losing trade, or if I reach 6R, or I've reached 5 trades for the day. That's fine, but if you're winning that day, you might want to keep trading, but that's okay. Right now it says all money management rules include commissions, and this person says everything in yellow is kind of malleable to meaning it's okay for adjustment later on. They're going to track it and adjust it later on. But for now, I think it's fine. It's a good rule to start with. You can adjust that rule later after a few months of trading and see where you're at. Fine. By following this rule, I will never end the day with less. That's true. Okay. I've reached a weekly target. I will cut my risk in half. If I drop to 4R, okay, that's 4 trades. I'll stop trading. Fine. If I reach 8R, I can resume trading full risk. Okay, fine. I'm good with all that. Okay. Reaching is 6R, whatever. Good. I should remember trades 100. Wow. Yeah, it would be at 5 a day. That's fine. Now, this one I have a little bit of an issue with. Once I've reached my monthly target of 20R, I will continue trading using a half risk. As soon as I drop to 19.5, I'll end for the month. That's one bullet. To me, I would change this to say 18. If you hit 20R and you go to a half risk, give yourself at least 4 bullets, right? 18R is not a bad month. If you went loser, 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 then fine, you're done for the month. Hey, and you should be if you lost 4 in a row, okay? But 1 trade? No. I think that's too tight, right? That's too tight. So for me, I would change 19.5R to say 18R. Still gives you 4 bullets, okay? All right, risk no matter how good I get or how much money I build on my chart, I will never risk more than 0.5% of my trading. Now, this one, I think this is very conservative. I think you could move this to 1%. Look, guys, if you start trading really well and you're 4, 5, 6, 10 years into this, there's no reason you can't do 1% of your account. There's no reason you can't do 1.5 or 2% if you're taking 1 trade at a time. Now, 2% is a lot. I don't recommend 2%, but I think you can move up to 1%. All right, I think 0.5% is very conservative. So when you say I will never risk more than 0.5%, that's okay. That's okay. I just think it's conservative. Okay, I think you can go to 1%. All right. Trade management, all right? From anecdotal experience, okay, I have found that I glue my eyes to the chart after I enter a trade. While the feelings are exciting, they are not conducive to my being successful. I know it's best for me to enter a trade, set the stop and forget it. Good. You're recognizing an issue. The issue is you stare at trades when you get in them. Good. How do we fix it? So to that end, next bullet point, I have purchased a Live Traders Trade Manager app. This app will offer me 2 things that are very important. Freedom from getting sucked into watching the chart, right? It'll push me to scan for other ideas. What I like about this is the person has recognized a deficiency and they've immediately done something about it to fix it. They've taken it upon themselves to go, whoa, I can't trust myself. Therefore, I'm going to use this app over here to make sure I can trust myself. Okay, good. Once in a trade, I'll set the management to custom, 1/3 at 1R, 2/3 at 2R. Good. Trade manager will manage the trade through completion. I will back test every trade using 1R and 2R. I think you should probably do more than just 1 and 2R on your back test, right? I think you should probably add a few more strategies to that, okay? They should enter the target and stop in 3. Manager will manage the. I'm trying to figure what you're saying. They should enter with the target. What is there, like another grammar issue or something? Every 100 trades, I will analyze my backtest data to see trends for the different trade management strategies. Again, I think you should do more than just 2. All right. If there's data showing I would have a 1% batting average, I will make the change in trade. Well, and this is another one, guys. I don't think you should make that change after just 100 trades. Okay. What I'm saying here is use the trades and time. If this is just 1 month, let's say hypothetically, it would be unusual, but let's say you took the max number of trades and you took 100 trades that month. 1 month to me is not enough. That could just be a certain market condition that month. I'd like to see at least 2 to 3 months of data, 3 months of data, and at least 1 to 200 trades. 3 months of data and 1 to 200 trades, personally, okay? General entry setup requirements, or general entry requirements from a patterns, must have non-negotiable, has not exceeded ATR. Now, my comment to this was fine, okay? Okay, my comment to this was fine. However, what does this mean with regard to targets? What if, again, I'm exaggerating, what if you took a stock upon entry that's 5 pennies below ATR, but to get 2R, it needs to double its ATR? See where I'm going with that? What if you took a trade that was just below ATR, but to get to your 2R target, it would need to double its ATR? Is that acceptable? Guess what? It's not specified, right? It's not specified. This needs to be more specific, okay? So targets should be within ATR would be a better way to say it, unless level 1 gap or something of that nature, right? That would be a better way to say it, okay? So I think that needs to be cleaned up a little bit. Not terrible, but needs to be cleaned up, all right? Must have, all right? Market trend is identified, okay? Stocks stage 2 uptrend is identified, or coming from a double bottom retest, okay? Now, yes, the ATR level should be specified. I agree. 9-day, 45-day, etc. That's a good point, Ollie, on ATR. You should probably specify which ATR you are referring to, because a stock can have a monster run like NVIDIA did for 3 weeks, and all of a sudden the ATR is double what it traditionally was for that period of time. So you're right. All right, so market trend is identified. Stocks trend is identified. Now, what if the market's going directly against the stock? Yes, it's relative strength. Yes, we agree it's relative strength. But is it something you should take? So when you say market trend is identified, what does that mean exactly? So we identified the trend. Great. Okay. The market trend is extreme bearish. Stocks in an uptrend. Great relative strength, but is that an ideal time to take the trade? Something you need to consider, something you need to think about, something you need to, I think, be more specific with, okay? 2R potential with a clear path, no level 1 or 2 resistance, fine. Sequential pullback, less than 50% overlap, 40 to 60% retracement. Angular trade, not. I think you need to identify this, maybe 45%, something like that, okay? Are you guys okay with these? Is there anything else that you guys, as a group, would add to the, quote, must-have category? What would you add to the must-have category? Give it some thought. I want to see if you're paying attention. We can talk about the like-to-haves in a minute. That might be something you would change to a must-have, or something that's just not on the list. Crickets, and more crickets. Okay. Liquidity and spread. Yes. Thank you, Jordan. Thank you. Liquidity and spread. Is the stock liquid enough to trade? Right? And given that time of the day, is the spread of the stock acceptable to you? And you have to define what is acceptable. 10 cents, 20 cents, 30 cents, depends on the price of the stock. Define it. And be very specific when you define it. Okay? Spread can't be more than 3x or 3x the stop loss, whatever, right? Stop loss can't be more than 3x the spread, etc. All right? So that, yeah, Alexis, that's the same as liquidity, right? Okay? Especially on those 2-minute buy setups and sell setups. So I would definitely add liquidity at the spread of the stock. Okay? Time of the day, I know it's already been stated in the plan, but you might want to have time of the day as well. Okay? I have moved relative to more important. I would as well. For me, relative strength and weakness is, I don't know if it's a must. It's pretty close to a must-have. I mean, almost everything I take has to have that. I don't see anything about multiple time frame analysis. Yep, I agree. So, for example, stock stage 2 uptrend is identified. Well, on what time frame? On the time frame of entry or the time frame of bias, or both, right? So is that uptrend on just the 2-minute entry, or is that uptrend also on a 60-minute, 15-minute? So yeah, I think that should be added. Brent, I agree. All right, like to have. Retracement to prior resistance area, ceiling becomes a floor, okay. Bottoming tail, igniting move, okay. Proper bottoming tail, remember, is 50% of the size of the move, okay. Volume spike on the igniting bar, okay, but make sure you qualify that, okay. Above VWAP, fine. Above the 20 EMA, retracement into the 20 EMA. Well, this is a tough one because now you're above it, but you're tracing into it. So for me, it doesn't have to be above it. I'm okay if it's around it, at it, near it, slightly under, slightly above, right at it. So it doesn't have to be above. I know it's a like to have, right? Retracement into VWAP, okay, but this one says above VWAP. So again, a little bit contradictory here, right? You can't have both of these, right? Whole or half number is ideal, Jason, especially on breakouts, 3-bar plays. Bottoming tail is green. I don't think this has to be green. I know it's a like to have, I know. But again, what if you have an awesome, amazing bottoming tail that has a very tiny, narrow body bar and it's red? Not that bad, right? Not that bad. So there are definitely some things we could add to this, in my opinion. All right. Next, pictures. This was placed into the trading plan as a perfect buy setup. Do you have any comments on this buy setup? Do you have any comments on this buy setup? What do you guys think? Jordan says terrible, don't like it, right into VWAP. Let me see. It's funny you should say that, Jordan, because in my actual paper comments, I literally wrote, I don't like this buy setup. And then I wrote, by definition, this is not actually a buy setup. Okay, and I wrote that in my paper comments. All right. And this was put in the plan as, quote, let's go back. Picture perfect example. Picture of a perfect example. Right there. Picture of a perfect example. And that's the next slide. Thank you, Jason. It's not actually in an uptrend. By definition, it only has one higher high and one higher low. It's not actually in an uptrend. It's below one of the moving averages. I don't know which one this one is. Okay? So my point I'm making is this is, to me, not an ideal buy setup. This is somewhat of a challenging buy setup. It's not one I would want to, let's say, burn into my memory as something that's perfect. Okay? While it's at the MA and it has a bottoming tail doji bar and there is a little bit of volume spike, this is not one I would burn into my mind. Okay? Now, could you argue there's a little bit of strength in this stock versus the market? You probably could make that argument, but this is not what I would consider a great example. Okay? Now, this is another example. Now, to be clear, guys, to be fair, this person had 5 or 6 examples in their plan. These are the first 2. I literally just took the first 2. I didn't pick and choose. I just took the first 2. I'm not going to go over the other 4. Okay? So, now, what do we have here? This right here, okay, right here, see the arrow, red arrow, red arrow. This was put in as a perfect sell setup. What's your guys' opinion on the sell setup? Talk to me. What's your opinion on the sell setup? Where the red arrow is what we're referring to. Crickets. Felix loves it. No V bottom, don't like it. Golf likes it. 11 a.m. and using a 2-minute. Ooh, I like it. Little steep. Guys, what's the problem here? If this is in your trading plan, 99% of people should just look at it and go, yeah, no brainer. Yeah, no brainer. Period. Almost everybody should just look at it and go, yep, that's the one. That's not happening here. And for good reason, it's not happening here. This is a stock that has a near, I mean, it's not really climactic, but it has a mini climactic pullback, right? Yes, it's at support right there, that dotted, whatchamacallit, yellow line there, okay? But that's a deep retracement back into enemy territory, and it's coming after, again, not climactic, but after a monster move down. You could argue this is the first sell setup after a large move, which we don't take. And you can see a bottoming tail here and a bottoming tail here. This stock fought it. You know what happened here? The only reason this worked is what? The market did this. The market put in a higher high and then sold off for like 27 million bars. Look at the market to the left. This stock was likely going to put in a higher low and go higher. Likely going to put in a higher low around 147 and then bounce. Okay? This market put in a higher high. And then whatever the news was, I don't know, it ripped through the 200 MA and just kept on going like nobody's business. It's the only reason this thing worked. This is not an example that goes in a trading plan. Right? This is not an example that goes in. Now, if you're Aaron or Cass or Unmal and you're scalping a quick option short, fine. 1, 2, 3, 4, 5, 6, 7, 8, 9 bars up, topping tail. Yeah, quickly scalp a quick option play on this thing. Right? You're trying to get 2R all or nothing out of this thing? It's a tougher prospect. And you're doing so after a market that breaks a pseudo double top. Right? Shouldn't be in a trading plan. Not for a perfect pattern. Okay. Pre-market routine. Alarm rings 8 a.m. Set up no later than 8:05. No trading that day if I don't follow this rule. If I'm sloughing here, okay, sloughing, all right, I will also be more likely to break plan. Fine, great, fine, major news, fine, term, fine, review gap list, carryover list, okay, fine. Check for important economic reports, fine. Top 3 stocks on your gap, fine. Write down and set alerts, good. Add gaps to thumbnail watch list, good. Review trading plan, read out loud my rules, 2 minutes of it, good. I'm okay with that. You could probably add something else in there, like, make sure you get a good breakfast in, or make sure you go to the gym, or whatever it is. But overall, I'm pretty good with that. All right. 9:30 to 9:35. Just watch and absorb the market, what the market is doing compared to my watch list. Perfect. That's exactly what you should be doing. Just watch and absorb. Take in what the market is doing. Take in what those stocks are doing. Watch the market versus the stock. Watch the market versus the stock. And just for 5 to 10 minutes, that's all you're doing, is you're going, these are the stocks I like. How are they reacting to the market open? I'm not touching anything. How are they reacting? Good. Look for strength and weakness. Good. 9:35 to 10, always be scanning. Okay. Scan for relative strength weakness plays, and then take them with the correct market direction. Zone in on my favorites. Check in with basket stocks. Patience is key. Let the patterns form. Do not force. Fine. I'm okay with like just a general rule. Okay. Make sure stocks haven't exceeded ATR. So basically, you're probably saying here, take everything else we talked about up here and add that to it. All right. But again, we need to clarify and quantify the ATR comment. We saw that earlier. No need to readdress it. Okay. Check for and close out open positions. This shouldn't be post-market, obviously, because you're going to be doing this before the market closes, right? Correct? Obviously, you want to close them before the market closes. Every single trading day, I must review my entire trading day. This is best done before I walk away from the computer. Fine. Fill out the trade journal every day. Best done before you leave. Great. What was my initial market bias? Make sure to note psychological and emotional state. How do I feel on a losing day? How do I feel on a winning? Good. I think, again, whoops, I apologize. I should put, and now the world can see it. My wife will review. Sorry. All right. Not that anyone knows who that is. All right. My wife will review my trades for the day, checking for total number of trades, money management, and trade management compliance. Good. I think you should record yourself. It's a comment I wrote. Get OBS, Open Broadcast System, and record your trades. Record you trading. And then do everything you said, and then go back and watch it. Go back and watch 30 minutes of it, an hour of it. Okay? There you go. All right. Day or evening before a new trading day, usually around 8:30 after the kids are in bed. Check basket stocks. Fine. Check swing positions. Fine. Continuing education, spend 30 minutes. Fine. Review PTS or other day trading educational materials, bar by bar. Watch Unmull's newsletter videos. Fine. Okay? Was it? No, I took it out. I'm pretty sure I took it out. Anyway. It was this, what are we on, 19 here? 18? I don't remember where I put it. There is? I messed up. My bad. Whatever. You guys don't know who Barbara is. All right. We just know it's this person's wife. All right. Record keeping. Crucial to keep detailed records of my trading. I must be diligent and dedicated to tracking every single trade. Fine, good. I will use a tracking sheet from Live Traders. Fine. Pay attention to statistics. Monitor my performance based on time of the day of the week, long, shorts. Good. Tracking spreadsheet will take care of all that. All right. At least once per week, back test the trades. I think this should be a rolling back test. Okay? Rolling back test. I don't think you should do it once a week. Just do it every day. It'll take you 5 minutes, 10 minutes tops. Just do it every day. Okay? Do not change management without significant evidence. This is too vague. What does, quote, significant evidence actually mean? Is that one day? Is that a week? Is that a month? Like, what does that mean? Significant. Not good enough. Okay? 100 trades? 500 trades? I need this to be qualified. Okay? All right? Day trading winning trades. Losing trades, trades I didn't take but I called. Okay. Define called. When I mean define called, did you ring a bell? Did you slap your hand on the desk? Okay. I want it to be official that you did it but you didn't take it. There has to be some qualifier there as well of this was a called trade versus a trade I thought about taking but just didn't take. Do something actionable that denotes you took the trade. Okay. Mark up the charts, drop into PowerPoint, include small paragraph about the setups. Good. Okay. Apparently I doubled that sentence, whatever. Statement of emotions after trade concluded. All right. Always remember 3 main components to my job as a trader. Identify my edge, assess risk to reward, always monitor my emotions. Trading is 99% waiting for entries and targets and 1% activity. So it's okay if I haven't taken a single trade after the first hour of the day or longer. I like it. All right. Can I trade today? This goes back to earlier. We talked about it. Am I all caught up? My tracking, journaling. Okay. Practice 10 minutes of bar by bar, et cetera, et cetera. How am I feeling? Motivated, calm. Good. Do I have integrity today? All right. What would be an example of not having integrity? That would be something like, because it's a vague comment. What does integrity mean to you? So when you say, do I have integrity today? What's an example of not having integrity? Is it not feeling disciplined? Okay. That could be an example using your previous statements here, but you need to define that. Okay. Now, You guys saw this, I think it was before the holiday, all right? And I just re-put it back in here. But before I get into it, this is the end of this person's trading plan. Talk to me real quick. Just let's take 30 seconds. Generally speaking, we know it's not perfect. That's why we reviewed it. What do you guys think of this person's trading plan? Now, remember, I did take out 2 patterns of pre-trade checklists and 4 charts, okay, to save time, all right? So what do you guys generally think of this plan? Good, bad, terrible? Be open and honest about it. Good start, almost there, not quite there, blah, 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 blah. What do you guys think about it? Some people say it's a bit too detailed for a newer trader. Great start, good start, overall pretty detailed. Good start, good mindset. I think it's there. I think you're right, Jordan. I think it's mostly there. I just think there's about 10 or 20% of things that need to be tweaked, fine-tuned. I'd like to see a little more in the pre-trade checklist areas. I'd like to see better examples. I'd like to see a more reasonable batting average and win-loss ratio for a more reasonable expectancy. I'd just like to see a few things, tidied up a little bit. But all in all, not bad. All right, not bad. Guys, I threw this together last night, this trading plan. I'm joking, it's not my plan. This plan was sent to me, and I literally had a chance to review it yesterday. And I thought, you know what? This would be a really good thing to add to the lecture. I don't think I've ever done this in a lecture. And I thought you guys would benefit from it. So yeah, I think it's a good start for this person. I think they took it seriously. And I think having met the person at mentorship, they're taking their trading seriously as well. And I think they will be successful because they care enough to be successful. So I like how the strong concept is, but breaking trading plan rules might be a bit too subjective. Yeah, I agree with you. I think that could be shored up a little bit as well. I agree, Ollie. There could be levels of consequence, so to speak. You know what I mean? Like not taking a trade you called for the day. Maybe a smaller consequence. But yes, all right. So that's the plan. Now, I'm bringing this back up from a few weeks ago. Why? Because I want you guys to see how important your plan is. I know you already saw it, but it's a refresher, a reminder in the new year. Okay? This is what breaking your plan does. You saw it. You saw it before. Okay? This is how utterly expensive it can be to break your plan and not do it that often. Right? Here's the difference in $150 6 trades and a $1,400 6 trades, and it's only really 2 times you broke your plan. Right? The weakest ink is stronger than the best memory. That's actually in my high school yearbook, Sophia. True story. In a high school yearbook, you get your own senior page. When you graduate, you get your little picture in it and stuff, and they ask for a quote. I have 2 or 3 quotes, and one of them is the weakest ink is stronger than the best memory. But anyway, if it's not written, it ain't happening. Point I'm making is, guys, small mistakes lead to larger mistakes. Small mistakes can cost you a lot of money. How expensive is breaking your plan and selling too soon? Doesn't take that much to cost yourself $150,000 a year. We saw it. I'm not going to harp on it, right? That's the difference each month, right? Only making a few mistakes here and there, right? By only making a few mistakes here and there, you cost yourself a lot of money. Win-loss ratio, 1 versus 1.87. It makes a big difference. So I want you guys to put, or at least consider or think about, the importance of following your plan. Are you going to get to the place you want to go to if you deviate from your plan? Probably not. And if you do, you better have good reason, meaning you've back-tested it. The results suggest you should make this improvement or adjustment. You don't whimsically do anything in this business. You don't do it on the fly. You don't do it in the middle of a trade. You don't do it after a market day. You go back on a calm Sunday afternoon or something after you have hundreds of trades and you go, yes, this is a consistent issue that I need to address. Okay? Jordan is 100% correct. The margin of error is very small in this business. We saw that today and yesterday. Here's a great example. True story. Chris knows because it was him. Yesterday, Chris had a trade miss his target by a penny, stop him out by 2 pennies, and then hit his target. Missed target by a penny, stopped him out by 2 pennies, and then hit target. Today, he had a trade hold his stop loss by 1 penny and then hit target. The margin is very small. So don't mess it up. Different approaches. We've talked about this already, guys. Put something like this in your trading plan. All right? A picture. I think people are very visual. So put pictures in your trading plan. Right? What bar by bar looks like. I know it's duh. We know what bar by bar is, Jared, but what does it look like? What do pivots look like? When can I raise? What constitutes a proper pivot to allow me to raise my stop loss? Everybody thinks that this first green bar right there constitutes a pivot. It does not. Just because you have 3 red bars on a pullback and you get 1 green does not make that a pivot. A true pivot needs to retest that high or at least go minimum 50% into it. That's a true consolidated pivot. Okay? Put these types of things in your trading plan. You're right, Jordan. Trade management will never be perfect. The market will eat you sometimes. The market will pay you sometimes. Put these types of charts into your trading plan. This also should be an example of journaling. At the end of the day, write what the target was, write what the entry was, and then write a little diatribe, one little paragraph diatribe of what your emotions were, why you took the trade. This would be part of your journal. Right? One of them's part of your plan. That's the general rules and guidelines. The next one is your tracking spreadsheet. That's your empirical data. What actually happened in the trade? It made 2R, it made 1R, it lost an R, whatever. And then your journaling is, hey, what did the trade actually look like, physically look like? Print it off. And then what was your emotional state during the trade? And then mark it up. Okay? And then put positive examples in there. Show yourself making money so you can look at what that looks like, what a good trade looks like, and what making money feels like. Because you're going to review your trading plan all the time. Put a bad trade in there so you know what a bad trade looks like, right? Have examples of what a perfect 3-bar play is or a whatchamacallit, a super play is. Put all that stuff in there, okay? All of it. So that when you go and review your plan, there's nothing left to chance. And don't get me wrong, you'll never be perfect. You'll go out in the trading world, you're like, ooh, my trading plan does not account for this situation. I need to add that to my plan. Okay? Look, trading is a challenging business when you do it right. It's nearly impossible when you do it wrong. When you don't have a plan. When you don't track your trades, when you don't journal, it's nearly impossible to be successful. When you risk too much money too soon, when you overtrade, when you don't take stop losses, when you don't have consequences, when you don't have an accountability partner, it's nearly impossible. Your plan will help keep you on the straight and narrow. Your accountability partner and consequences will also help you do the same thing. All right. So again, I've never, that I can recall, I may have missed one, but in hundreds and hundreds of lectures, I don't think I've ever reviewed somebody's trading plan as a lecture. I know we went a bit longer today, but I hope that you guys learned something from reviewing this trading plan because I think it was helpful for a lot of people. And I hope it was helpful for you. And I hope that you've garnered some good ideas of things you can add to your plan and things that maybe you can adjust or help make you become a better trader. All right. I'm Jared Wesley of Live Traders. We'll get back at it again next week.